Hey, how's it going, everyone? Before starting, I just wanted to make sure, is my audio clear? Can you guys hear me talking? Is everything alright? What a nasty reversal in the overnight sessions, huh? This is CS, we're actually pushing higher here. I'm not a big fan of shorting the tape today. I gave the reasons. Because Bank of England intervened and said they're going to buy bonds. So what does it mean? It means like during 2020, what happened? When the market crashed, they came out saying that they are going to buy bonds to help the economy, and the market pushed higher. They're not technically reducing the interest rates, but it's similar to quantitative easing, but they're just buying bonds here. That's the only difference. So it's actually pretty optimistic for the markets, and the zombies in the US will automatically assume that the Federal Reserve is going to follow the same path because Bank of England did the same. Bank of England fumbled, so Federal Reserve should also fumble, right? Yeah, we might see some optimism here in the futures if Apple turns its gear around this 145 area. So we gotta wait and see. Apple is actually bouncing from our entry, and you can see it run a test to 147 because all the other big techs are actually doing good other than Microsoft and Tesla. Apple is the biggest lagger here, but we can start pushing higher from where we are at the moment, provided if QQQ turns around. QQQ breaks this range, which is around like 11,350 in NQ. We can see Apple pushing alongside with it, so let's wait and see what we have on tape. I am actually kind of bullish, it's just a bias, but yeah, let's see. We can turn around with Apple down this much. It's a risky business, but I'll take my chances. So this stream is all about risk management, and we will go over it, and we'll go over how to manage them. Hey Irab, good morning. Thanks for joining, appreciate it. If you guys have any questions, you can shoot it in the chat section. I'll read it, and I will try to I'll try to do my best to answer them. And let's see. So depends on the size of your portfolio. The ways you manage the risks varies, right? So let's say you have a $1,000 portfolio. And if you have a $1,000 portfolio, and if you go and buy an option which is worth like $300-400, and let's say that option expires in a week, you can win on this option, and you can easily flip this $1,000 account into like 2,000 or 3,000, or you can turn this $1,000 account into $600 account in matter of a week. And sometimes whenever people trade options, they usually sell it too early or sell it too late, so they won't even realize the full potential or full maximum profitable ability in that option chain. So why will you spend $400 when your entire account size is just 1,000? And even in that $400, even if you set your stops at $2, let's say you're going long on Apple here at 145 by spending $400 on an in-the-money option, and if your account size is only $1,000, and if Apple doesn't bounce from 145, let's say you have your stops at 143 or 144, you lost like $80, $90, let's assume. It's still a lot of money, $90 in a single day for a $1,000 account. So if you have a $1,000 account, this is how you do it. I mean, it's totally up to you. There is a different risk to reward setup which has been out there. First, which we are going to go over, is the 2:1 risk to reward, which most of the traders use. Some traders use like 2:3, some traders use like 1:4. So it's just a ratio, how much money you're willing to lose and how much money you're willing to make. That's the ratio here. So for example, let's say like you went long on SPY and you spent like $50 on the trade. So technically you're risking $50, and in that entry, you according to your analysis, SPY, the contract can move all the way to 200. So technically you're risking $50 to make $200. So the risk to reward here is 1:4. So this is a decent risk to reward. So even if you lose this position, like even if this position completely goes against you, you still only lose $50. And the $50 to the $1,000 account is like what, 5% maximum? And the thing about this is you wouldn't be panic selling. That's the best part about it. You wouldn't be panic selling because your positions are going lower. And if you just got a $400 worth of an option, and let's say if it goes down like $80, $90, you'll start panicking. You'll be like, oh shit, I gotta do something. Even though the setup is right, even though everything what you did was right, you'll start to panic and you'll be like, oh shit, I gotta sell because I did something wrong. I gotta sell. I gotta do something about this positions or it'll go against me. All this nonsense. This is a psychological warfare, like especially if you over leveraged. And if you're a beginner trader and if you've already lost a lot of money, you must have already been in the situation where like you got into a position and then like you sold out way too quick because you saw it going lower. And once you sold it, you will see the same position rocketing because it's not your trade which is wrong. You're perfect on your trade. You just sucked at the execution part because you over leveraged on your risk levels. So if you have been there, let me know. It's a very common occurrence with the new traders where like they typically over leveraged compared to their account size. And there is a difference in psychology where like you can risk $50 in a $1,000 account and be like, yeah, I don't care if it wins or lose. Maximum I can lose is $50. And I can make 200 if it wins. So even if you lose that $50, psychologically you wouldn't you can go to sleep by leaving the position open. You gotta ask yourself like, if can I just leave this position open and close my phone and not check on my position every single second? If you have if your brain is forcing you to check your positions for every 5 minutes, it's not a decent risk levels. You didn't manage the risk. Every time you take a trade, especially if it's for a swing trade, just close your phone and see the charts. You won't be seeing the contract move for every 5 minutes or every 2 minutes. It doesn't work like that. So if that's the case, which means like you got to manage the risk even better. So if you went long on SPY by spending $50, you'll just shut off your phone and you'll be like, yeah, whatever happens, happens. You see the difference in psychology here? You can't do the same with a $400 contract. So when you're taking the trade in the first place, if you can't afford it, don't go way out of the money. There are way different stocks. If you can't afford SPY with a $1,000 account because like the contracts are $300, $400, you don't have to trade SPY. You don't have to trade SPY until your account size gets to like at least 5,000 or 6,000. So like the $200 don't matter much at that point. So until the $200 doesn't matter much, don't trade it. Don't trade way out of the money contracts. You don't want the 2-day expiration bullshits because in 2 days you never know what's gonna happen. Even though you might be right on your price, it's still not worth it because the risk level is too high. So what to do? If you have a $1,000 account, there are multiple stocks you can take a look at. So let's say stocks like Uber. If you go to the option chains of Uber and check it, you'll see how cheap the premiums are compared to that of the SPY. And let's say WDC. You can go to the option chains and see how cheap the premiums are. Same with Wells Fargo, same with Bank of America, same with Shopify is kind of expensive, but yeah, it's not bad. All these stocks, same like Palantir, and all these stocks have decent premiums. You can get in the money option for $30, $40. that cheap, especially if you guys are into the weekly option chains or whatever it is. Even if you want to get like options for 3 or 4 weeks out, you can still get it for less than $100. Instead of going like way out of the money, like 2-day expiration. Let's say if you want to do the same thing on SPY, you got to go way out of the money, and that thing expires in 2 days, and it might be having a delta of $2 for every single dollar move, which is not worth it. So if you guys have a smaller account, I would recommend you guys looking into the other stocks, like the ones which I mentioned before, the financial sectors like Wells Fargo, Bank of America, the Citibank. Those are the 3 examples in the financial space. And if you're into tech space, Uber, Lyft, Snap, what else? There's multiple stocks over there, but Uber, Lyft, Snap, Shopify, what else? Zillow, HOG, all these are examples to trade in tech space. So it's like you do have a basket of stocks which you can keep an eye out for, and which you can trade, which suits your account needs. If you can't afford it, don't go way out of the money just to buy something on the same stock to capture pennies. It's not worth it, because out of the money options are at this moment in particular way expensive. If you used to spend like $20 on a way out of the money options, which is out like 10-15% from where the price is, you will be spending like $70-80 for the same option which you would have paid $20 for when the VIX was at around 24 or 23. So if you think about it, there are certain things which you shouldn't do when it comes to options. Buying way out of the money options which expires in like a week or so is one of them. It is designed to sell. You gotta sell way out of the money options to capture the premiums. So there's certain things which you need to keep an eye out for, and risk management is the first thing. So your job is not to make money, your job is to protect the capital. You should be a risk manager first, and then you can think about profits later. Once you manage to risk, let's say like you take the trade $50, you risk $50 and you make $200 in one trade, and then you lose 3 trades at the same time, continuously. You lost 50 in another trade, you lost 50 in another trade, you lost 50 in another trade, and then you're like, yeah, fuck this, I'm done with it, I'm done with today. At the end of the day, you still close the day in profits, you're still up $50. It doesn't matter how much you win, it doesn't matter how many times you lose, and if your winning percentage is higher and your P&L is in shit, which means you didn't manage the risk wisely. So next time when you take a trade, keep an eye out for your account size, and if your option is way higher, like 20, 30%, 40% of your account size, then it's time to say bye-bye and look for other trades. You don't have to chase the moves. There are way other setups, like a lot of setups out there. So it's something to keep an eye out for, something to keep in mind when you're trading, especially with a smaller account. And if you already lost a lot of money, most of the people will be in the mindset of, okay, I already lost a lot of money, I have to recoup the losses back. Nope. Once you lost it, you lost it. It's done. It's over. You can't change the fact that you lost it. The only thing you can do is to not repeat the same mistakes again. That starts by focusing on having a proper risk management scheme. Some people do this with option percentage, and let's say like if they went long with SPY and spent like $400, they'll always set their stops at 10%. So if it drops under $40 in options percentage, they'll cut it. But I've spoken about this before, why setting stop losses based on options is a risky business, because you will be right and the price would have never broken under the support level, it would have just been consolidating. But option premiums moves based on multiple different factors. Like, you got to keep an eye out for theta, you got to keep an eye out for vega, you got to keep an eye out for implied volatility, like all these stuffs or some things which you have to keep an eye out for when it comes to trading options. The premiums move based off of all these factors. This is called Greeks. So if you set your stop losses based on the percentage of your options instead of the price, you will never know how the premiums are gonna move. So it'll be way better to just focus on the price and just set the stops based on the price. And if you can't afford the option, or if it's too risky compared to that of the portfolio, it's better to stay away from it. Don't take the trade. Even if it works out, it's not a good trade. Good morning, Mario. You're speaking the truth. Manage the risks now. I'm on the sideline. Exactly. Like, if you can't afford it, you shouldn't buy it. Will you? Okay, let's. It's simple. Like, you can just compare this situation to your real life. If you only have $1,000 to survive in your bank account, will you go out and buy an $800 worth of Gucci belt? I don't think you do, because that $1,000 is all you have to survive the month. You will be very, very cautious with spending that $1,000. You will, before spending, you'll think twice, and you'll only buy things which is actually necessary to push you through the end of the month. Why is it any different when it comes to trading? It's the same concept. If you only got $1,000, it's like a business. You gotta treat it like a business. You only got $1,000, and you shouldn't be YOLOing on options which is like way expensive, which can absolutely wreck your account. All these things are certain things which you need to keep an eye out for when you're trading. So as I said, like, manage the risk. If you lose, you lose, and when you lose, it shouldn't matter much, because like, you at least manage the risk. The $50, losing $50, it happens. Everyone loses. I understand that not every trade can be a winner. That's the exact main reason why you got to manage your risk. You know that not every trade can be a winner. You know that things can go south on your face, and it can just like blow up on your face, and it doesn't work all the time. If you get lucky, and you make money, but if you didn't, then things can get ugly real quick. So keep this on your mind, and something every trader should know. So that being said, we will go over the markets and see what's going on. And yes, here we go. Alright, we got rejected at our 366 levels, and now they're pummeling back lower. Thank you for this education. Yeah, you're welcome. It's something to keep an eye out for. Like, if you're just starting to trade, and or if you're trading for a while and you lost a lot of money in options, you gotta take a step back and you gotta write it down. Why? Most of the reason why is because the need to trade every single day, or taking trades which has no business of actually even being in on. All these are some of the examples. Or not managing the risk wisely, over leveraging, and like if your entire account is just $1,000, taking a trade which is worth like $400, $500, $600, which expires in a week, trading weekly options. All these might be one of the major factors. So SPY rejected 366 to the penny here, and we are coming back lower. Let's see what Apple is doing. Did we get that bounce at 145? Hell yes, we did. All the way to 146.70. So if you guys took the trade at 145 from our first entry, that's a nice $1 trade to the upside. And I still do, I mean, if you guys are still holding a runner or something, your stops is at 145. If we break under it, we can go all the way to 144.30. Nasdaq is lagging today because of Apple, and S&P 500 is just flat. And this is the ES contracts, the one which you see on the screen. So you can see the range which has been going on. It's like it's just from yesterday's session to right now, it's 3640, which is an important level, all the way up to 3672. The arch is hanging around, floating around, going back and forth, back and forth. So let's see. They reversed the tape last night from 3612. We already mentioned this in the morning updates. So if they pummel it back under, we can see it running a test to 3640 again. So did you guys take any trades today? How's it going? Let's head over to Discord and see what's going on. Apple, this is the first, this one is a put, second one is a call. I got the call to join the live stream paper trade, but amazing. So you played Apple puts and you made decent money. Congrats. Can you guys hear the audio though? It's like, yeah, you guys should be. I just saw the messages. So pending home sales came out worse than expected today. Right, so I'm having AMD in my watch list. So if you guys are, so since you guys are here, I'll just say it here instead of posting. Let it be a live stream exclusive, like whatever this shit it is. Alright, so if you guys see AMD, it's in a no man's land at this moment. Alright, two things can possibly happen from this point on. We can either go all the way up to run a test to $72, or we can keep selling off from where it is at the moment all the way down to 58.59. If you haven't shorted AMD yet, the risk here is for your short is the AMD bouncing from here going all the way to 72 and then coming back to our number at 58. If you're already short through this break and if you're still holding on to it, your take profit area should be at $58, like to $59. That is a very, very important area for AMD. It's an important support. If you haven't longed AMD till now, that's the good area to take the risk on and to go long on AMD at. Because we can expect a bounce from there. I'll tell you why. If you go all the way back, you can see the importance of the level. You can see how many times it rejected. It touched the highs before the COVID crash as well, around that 58.92 to 59 area. If we break, if we come to run a test to it, it is very much possible we can head over to that 58 zone. There is also a gap which needed to be filled over here around 64.20 all the way down to 61.96. That's something to keep an eye out for. And if they fill this gap and then starts pummeling lower, there's a very high likelihood for AMD to come down all the way to run a test to $59 to the downside. So keep it on your watch list. Don't miss this trade to the upside when it offers. These are the type of trades which you want to take, like high risk to reward, high probability of a bounce. So let's see the empowered woman channel. Yeah, deal. I figured that's you. Thanks for joining though, appreciate it. So by the way things are looking, AMD is just consolidating in a bearish, flaggish type of pattern. You can see it, right? Let me remove this, extend left and extend right. So for now, it's just consolidating in a bearish, flaggish pattern. And if it plays out, we can see this flush down to $61 or all the way down to 58.91, which was our levels. So that's the thing, like as I was saying, so if we go back all the way, $71 to $72 might be something to keep an eye out for. So this is something which is on my watch list. AMD, important stock in the semiconductor space, important stock to keep an eye out for. If I'm biased, okay, let's analyze this, like how things can go. QQQ is headed into an important area, which is the June lows. And if they do spike it from the June lows, semiconductors are going to follow the suit as well. If that's the case, we might see a bounce all the way to 72 first before headed towards the gap fill at 61. What's the risk factor here? If they can't take out this range, which is from the highs of 68.94, if they can't take it out, and if they're just consolidating in this range, and if QQQ broke under June lows, we can come down to fill this gap. So for now, they're not breaking. Even if Apple down like 3%, they're still holding on. And again, they are consolidating in a bearish flaggish pattern. They can pummel it down. The problem here is, since they're consolidating in a bearish flaggish pattern above an important area, which is of the June lows at 270, if they flush it down, this area is not going to hold. They are going to break it lower. So 270 is not going to hold if we break under 268 and change the consolidation range. This can push it all the way down the QQQ to run a test to 260, or even 251 to the downside, or to run a test to the highs pre-COVID, which was at around 237. And that's the risk. And if that happens, AMD won't hold that $59. AMD will pummel under it. There might be a case where you'll see AMD at $40. But that is the risk which you gotta keep an eye out for. Let me know what you guys think of the analysis. So do you guys think we have much lower prices or much room to go to the downside, or you guys think we're due for a relief rally? But relief rally, it can happen multiple ways, like what happened last night, right? Like they just bounced the tape higher. They bounced the tape higher in the overnight and then sold off. So let's see how the rest of the day goes. If you guys have any questions, you can let me know. And yes, I learned something new yesterday. It's about the Forex markets, and it was actually pretty interesting. And I know some of you guys actually played spreads. And with the spreads, unlike options, as long as the stock stays above your strike price, you'll make money. If it's not above your strike price, you'll lose money. That's how spread works. Good morning, Mario. Just curious, are you still in Uber or did you get stopped out? Uber, I gotta take a look. Just a minute. Nah, I'm still in it. I'm looking to sell though, because the Nasdaq is holding on and Uber is also holding on. I'm actually positive on my calendar spreads because I've been selling puts alongside shorter term puts alongside with my longer term puts. You can hold on to it if you're doing a calendar spread. Like for example, let's say you're holding a longer term puts, which is like, let's say October end, all right? That's your expiration on your puts, and you're selling puts which expire this week, and you're selling puts which expire next week, stuff like that. So what I did was I had this October 14th 2650 puts, and I've been selling. First what I did was I sold that 2650 put which expires on September 30, and yesterday when we got that pop to 2850, I bought back that 2650 put and then rolled it over to 2550 which expires on the next week. So there is no reason for me to get stopped out yet because it's still under the area which I'm planning on getting stopped out. You can see today's chart on where they got rejected. You can see on yesterday's chart on where they failed to close above. This 2780 area is very important spot for Uber. Again, they are consolidating in a bearish, flaggish pattern as well. If they break under, we can come all the way down to say hello to $25, $26, or all the way down to fill this gap at $24.63. Again, just as I said about AMD, the risk for you over here is Nasdaq bouncing from June lows. If Nasdaq bounces from June lows, this thing is gonna follow the markets. This can go all the way to fill this gap at 28.55. They tried to do it yesterday, but they failed. But if Nasdaq pushes higher, they can capture this AVWAP, which is this squiggly line from here. This is the AVWAP from the June lows, and they got rejected to the penny from there. And if they break above it, they can go all the way up to fill this gap, which was the unfinished business from last night, I mean yesterday's session. Can go all the way to fill this gap at 28.53. And then march towards that $29.78 levels to recapture this big breakdown candle. So your risk on your puts is closing candles about 27.50. People are shorting Apple. I don't know why will you go short on Apple when it's sitting right at support. And Chris Saint's Discord is something else. Bounced off from our first entry in Apple at 145 and change, and now we are pushing higher. Let's see how the numbers did. Like, let's compare it to our notes and see what's going on. So in the morning notes, we said Apple pullback pre-markets under first entry offers some tradable bounces to the upside leading into today. 145.50 is what we had. So let's see, guess where we never closed candle below. Let's see, okay, 145.50. Let's draw a line over there. What is that? Let's zoom in. Alright, so 145.50 was our entry 1 and 144.40 is our entry 2. So they did some goose operation in between. We were off by 40-50 cents. Even if you got in over there, let's go to the 15-minute charts. Even if you got in over there, we never closed any candles under that zone, that 145 area. It is like almost a $2 trade over here on Apple from 145.50, the entry 1. If you got in, congrats. As the Apple is pushing higher, so will the markets. Consider trimming some of your profits along the way, and don't get greedy. Manage the risk, as I always say. 147.63 will be the next level to watch out for to the upside. So SPY is pushing higher, I guess. Yep, Nasdaq is pushing green as well. SPY is above that range. Now trying to run a test to that 37.15. So let's see if that's possible. They take out 366 to the upside. We can go all the way back up to run the test to the 368.50. And then above it, we can go up to like 370. Also, if you guys notice something, there is no indicators in the chart. The only indicator which I got at this moment is ATR, which I don't keep an eye out for when I'm trading on smaller time frames. If you go on a daily, you can see the ATR is, let me use this. ATR is at $7.52, which means from the opening print, if SPY pushes higher and higher, and if SPY had a trend day, we can push all the way from 364 to 371 to close the day over there. If we go to 371, guess what? The 371 is also an important area. 370.36 is where we got projected multiple times for the past 3 days. If they push higher, we can recapture this. We can go all the way to fill this gap at 374. But we'll take it from there if they do it. But until then, we will tread lightly. Okay, it looks like it passed resistance around 55, 52. What's the ticker? Crystal Web. Looks like it passed resistance at 55.22. Are we talking about Kellogg or what's going on? Like, can you tell me the ticker name so I can take a look at the charts? Okay, it's Kellogg, right? Alright, so K is actually trading at $72. Am I tripping? It's 72.08. Oh, KO, alright. KO. Oof, another nasty looking chart. This one. They filled this gap and blew through it. Fucking hell. I don't trade the stock, so just give me a minute while I draw out the levels. There is a big gap over here, which is all the way from 56.95 to 56.25. So if they close candles under it, KO can run a test too. There is a first level of support which is going all the way to August of 2021, which is at $55.57. Let's just call it 55.50. That'll be the first area of interest, and breaking under it, we are looking at 54.84. And there is no other respectful area around. Yes, so if you're trading KO, you got to keep an eye out for 54.80, which is an important spot, and above it, you got to keep an eye out for 55.50 for an interim support and on intraday basis as well. But $54.84 is important because that acted as a resistance which caused a massive reversal over here on December of 2020. But if things go wild and things go south and for some reason like everything was doom and gloom, KO can come all the way down to run a test to this 52.50 zone, which is all the way over here. Something to keep an eye out for. So if you're short KO, the numbers you need to watch out for is 55.50, 54.84, and for that to happen, they need to start closing candles today at 56.30. So if SPY and QQQ rips higher, they can easily go back up to recapture this 56.30, which was the gap, and they can just reverse right from here. And to the upside, 56.98 is the first level of resistance, which will be the top of the gap, and above that, the 5-day moving average is coming in at 57.45. My biggest takeaway from today is that my job is to predict the capital and manage the risk. Exactly. Your job is, making money will follow if you do these two first. Protecting the capital is the main job for every single traders out there. It is important for you to do so because without the capital you can't do anything. So that being said, so if you guys have any questions, go ahead, ask me here. I'll be here for another 5 minutes. Like, if you guys are good, we can discuss the rest in the chat. And I'll try to go live again tomorrow for a Thursday session. Am I free tomorrow morning? Yes, I'll be free tomorrow morning. So if you guys like the 9:45 stream, we'll go ahead and talk about spreads and how to open one. I spoke a lot about, like, don't spend like more than $50, more than $60 on an option. But let's just say you've got a great setup on SPY and you are almost 90% sure that it's going to work out. But you can't trade it because you don't have enough, you don't have the risk assessment to take the trade. If that's the case, there is a getaway and there is a way you can actually take the trade and make money out of it, but still manage the risk by not being way over leveraged. That's where spreads come in. So we'll go over spreads on tomorrow's session, and the link of this stream will be available. You can rewatch it anytime you want. And for tomorrow, and this is only for this is for Patreon only, by the way. Keep it low key. It's only for tier 2 and tier 3. So tomorrow we'll go over the spreads, and we will join the tier 1 over there as well, so they can find usefulness alongside with it. I will try to make it as simple as possible so everyone can understand, because spreads, people make it sound way too complicated than it actually is. It sounds complicated because the term spreads in itself, it's all techie and stuff, but it is actually not. I'll try to keep it as simple as possible tomorrow. And if you guys have any questions, you can ask me over here, or else I will see you guys in the chat. Making money will follow. Been putting the cart before the horse. Yes. Making money will actually follow if you actually have a good risk management plan. You see, again, losing on multiple trades doesn't make you a bad trader. What makes you a bad trader is that losing on a multiple trades and then blowing up your account. Now that makes you a bad trader. Everyone loses. Every single person have the losing trades, but they still live to survive the next day because they managed the risk. They cut the losses early. They didn't want to hold on to any bags. They have a proper risk management scheme. If I lose $50 on this trade, I'm out, regardless of how good I thought my entry was. If your entry was so good, you wouldn't be down $50. So take away your bias when it comes to trading and be disciplined, be concise with the risk management. If you're wrong, you're wrong. You can't do anything about it. So it's all good. Now moving on to the next trade sort of thing. So that being said, take high probability trades, manage the risk wisely. I'll see you guys in the chat. If you have any questions, feel free to reach out. I'm very happy to help. Right. See you guys tomorrow. We'll talk about spread.